Ladies and gentlemen, welcome back to the channel. Today you are actually witnessing history. The largest FDIC insured bank has now been shut down per the regulators, and this happened at lightning fast speeds, and it is sending rippling effects through all of these other bank stocks. Notably, we called out in the last video, First Republic Bank dropped at its lowest point, down about 51% earlier in the trading day today. This could potentially induce some for-share recalls within AMC and other hedge fund positions that are deemed riskier, because after all, when a crisis happens, people like to get their money back, right? Banks like to make sure that they have adequate liquidity to be able to meet all of their needs in case a bank run were to happen on their bank. And that's exactly what you've seen for the first time in like 80 some years, was a massive bank run on the Silicon Valley Bank. Now, the interesting thing about all of this is not really your bank where average people bank. This is more so people with large net worths that bank here. So to some degree, I know a lot of people are going to laugh at this and say, you know, the rich people got what they deserve, so on and so forth. But that could also impact the markets to an even deeper extent than what you are seeing today. It's kind of hard to pinpoint how much, Zuck had in Silicon Valley Bank, or how much XYZ billionaire had. They had over $200 billion of assets under management. So you're definitely going to see some capital moving around here, and it could affect some of your riskier bets in the markets. That's really what I would target with this. Not every single individual stock is going to be affected by this necessarily, but these guys that also had money in Silicon Valley Bank, they might also run a hedge fund. They might also have short positions on AMC, and a lot of them are going to be playing this arbitrage trade. That's the whole reason why they are short in AMC to begin with. Now, if we get further into kind of what I expect throughout next week, I think it's pretty clear that we get a bullish reaction. I think either way you put it, right? Hedge funds were banking on March 14th being the day where AMC would drop a lot. And I think even if the vote comes back as a yes, which it's highly expected that it will, the markets have already priced that in. AMC might actually rally off of that, because after all, we won't have anything happen at least until April 27th. And even furthermore, then it's going to be months down the line before you actually did get a court that would rule to go ahead and do this 1-for-10 reverse stock split and the other initiatives that are being voted on March 14th. Now, I think that's important to understand, because nothing will be set in stone next week. And essentially what that's doing is kicking the can down the road further for these hedge funds. And a lot of them took on some pretty big positioning in AMC just to play this. Over the last couple of weeks, AMC stock has pretty much done nothing but go up. Yes, the last couple of days, AMC has been trending down with this bank news, with the Fed Jerome Powell, right? There's been a couple of reasons why stocks have really been selling off. But by and large, their trade failed. And that's the bottom line to it. You're going to see these hedge funds either roll over those positions or start to slowly close out their short positions. Now, best case scenario for next week for this March 14th vote is if it comes back somehow as a no. If it comes back as a no, then not too much the courts are going to do about that. It's pretty much going to be set in stone as a no. And that ultimately, I think, would trigger the MOAS pretty shortly after that. That's not the base case. I think a lot of people expect this vote's going to go through. Intera Capital owns like 35% or more of the voting power needed to pass this initiative. So I wouldn't get your hopes up for a no coming March 14th. Now, on top of that, on March 14th, you are going to get the CPI report. Now, mix the CPI report with this important vote with AMC. You could see a very big move to the upside or to the downside. I think it's pretty well known inflation's going to be high again, right? And why I say that in this kind of way is even if inflation comes in a little bit hotter than expected, if it's not too hot, that's a good thing. Like the jobs report we got today, 17,000 new job ads for February. You were expecting around 210,000 job ads, and the markets actually rallied pre-market on that news. Initially, when that came out, we can actually go ahead and pull it up for you guys. The markets, they actually went up. The only reason the markets actually sold off today was because of this banking situation. And look at pre-market. I mean, the S&P went from 390 to almost 394 based off of a hotter than expected jobs report. So I don't necessarily think next week has to fuel a lot of downside. And from my perspective here, the markets have fallen so much down to 384.33 intraday today. You probably already priced in a lot of bad news. So I don't really think this is the time to be ultra bearish on the markets. The time to be ultra bearish was when maybe the S&P was trading, 410, 415 over the last couple of weeks. It's not when the S&P is back down to 387.50. Now, I think the one thing that could really lead to more downside from here is obviously if more banks start to feel the pressure. If First Republic starts to come out with some troubling comments, if Goldman Sachs starts to come out with some troubling comments, that could fuel more downside, and that could really overweigh anything bullish that does end up happening next week with AMC stock. Now, I don't think that is the base case. I don't think this has to lead to other banks going bankrupt, essentially. If it does, not going to be good. But I don't think that's the base case. Hopefully that makes some sense to you guys, and long story short, that could fuel some upside for next week as well. Now, let's go ahead and switch gears here and get into the data behind AMC that you need to know for the day. If we take a look at the live short interest, sitting at 23.69%, 122.33 million shares that are currently sold short. Cost to borrow average 245.66%, cost to borrow max 286.48%, and cost to borrow minimum of 0.59%. If you take a look at Interactive Brokers short availability, you do have about 350,000 shares available to be sold short, to be traded, with a cost to borrow rate of about 102%. So nothing out of, the realm of normalcy, what we've seen over the past couple of days, but still these numbers are very, very high. AMC remains to be on the threshold securities list, which again is not a big shocker. And that's been the whole premise of the last couple of days. Adam Aron calling on FINRA and the New York Stock Exchange to take a look at the trading within AMC. Long story short, there probably is some naked shorts. The failure to deliver numbers are so high that I think there's no way that there's not. And that ultimately does fuel bullishness in AMC stock. If you guys are unaware of the failure to deliver numbers, specifically looking at next week, the closeout day of March 13th, which is Monday, you have 1.8 million FTDs that come due. Tuesday, 2.5 million FTDs. On Wednesday, 3.4 million FTDs. On Thursday, 3.9 million FTDs. And on Friday, 6.8 million FTDs. Couple that with an extreme option expiration. 31,000 calls in the money, 661,000 calls out of the money, 273,000 puts in the money, and 907,000 puts out of the money. You're going to be looking at extreme levels of volatility, and I think just based off of everything we're talking about here in this video, you're probably due for a big upside rally next week. Now, I'm not a financial advisor. This is not financial advice. Blah, 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 blah. It should be pretty straightforward, the information that we are going over. A lot of the bad news, if you wanted to summarize this long story short, a lot of the bad news has already been factored in and priced into AMC stock, especially as the stock has been going down over the last couple of days. It sets you up for that rally next week in a little bit better of a position. Now, you're on an interesting pattern as far as the technicals are concerned. You broke under this support level in this bullish channel, but you're still above this long-term bearish resistance level, right? That's going to be this darker blue line right here. You're still above that. As long as you're above that, that's going to be a good thing. By the time we get to next week, it's going to be about $4.50 per share. That was the low that you've seen back here February 14th and 15th. So you're still up quite a bit from that low. If you do do hit that low and flush under that, then you could easily break a new low for AMC for 2023 and for 2022. I don't think that is very likely. After all, you would have to see a drop of about 17% from here, considering you have already seen a very steep drop. Does not look likely. Now, on the other side, if you can get a bounce above by next week, about $5.94 per share, which would be an upside move of about 13%, then you're going to be looking much more bullish, and then you would target this upper end band, which would be a rally from here of about 70%. So I do think the risk to reward looks really good as far as the technicals as well. You're not in a bearish downtrend, you're not really in a huge bullish uptrend, you're kind of in that middle ground waiting to see what does happen. I would say, if you wanted to long story short this as well, above $5 is a good thing. Under $5 is a bad thing, or at least showing negative sentiment overall with AMC, guys. So that is going to do it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section if you have not already. Thank you guys for doing that. Most importantly, forget all of this information. Enjoy the rest of your day, and I will see you in the next one.